Trends, reversal, the most important element of trading. The successful trader knows how to follow market trends to maximize their profit. But, just like Newton's law, every action has an equal and opposite reaction. In the trading market, trend eventually will occur a reversal, and the experienced trader can identify reversal using price action and reversal pattern. But, what if I told you, there is an indicator that can anticipate reversal before they occur, and also can use this indicator to create a high profit strategy? In this video, I will show you. Open Indicator tab. Searching for Red K Everex, Effort versus Results Explorer. Made by Red K Trader. This indicator combines two very advanced trading concepts, volume price analysis and Wyckoff law, effort versus result. I know it sounds a little complicated. Let me explain. Volume price analysis. Volume price analysis, VPA, is the examination of the number of shares, or contracts of a security, that have been traded in a given period and the associated price movement. By analyzing trends in volume conjunction with price movements, traders can determine the significance of changes in price and what may unfold in the near future. Wyckoff law, effort versus result. Wyckoff law, effort versus result, dictates that large effort is expected to be accompanied with big results, which means that we should expect to see a big price move, result, associated with a large relative volume, effort, for a certain trading period, bar. Don't worry, you can replay it again or Google it to gain a deeper understanding. Let's look at the indicator components. First, these green and red histogram are the combination analysis of price and volume. When the histogram is green, it means a bullish short-term trend. When the histogram is red, it means a bearish short-term trend. And this orange and green interleaving line is the signal line. This gray line is a smooth line. These two lines are the crucial elements in the later trading strategy. In the setting part, we need to change the MA type to EMA. And also we need to add two horizontal lines, one at 50 and one at -50. The strategy is pretty simple. When both lines are under -50 and the smooth line upper crosses the signal line, it means a buy signal. When both lines are above 50 and the smooth line under crosses the signal line, it means a sell signal. But if we only use this condition to enter our trade, which will result in low accuracy, the better way is to also consider the price and volume mixed histogram. Let's look at this example. When both lines are under -50 and the smooth line upper crosses the signal line, also the histogram is green and above 50, so we enter our trade. Another example. When both lines are above 50 and the smooth line under crosses the signal line, also the histogram is red and above 50, so we enter our trade. Moving average. This indicator is the first one for lots of traders, known by its simplicity and powerful predictiveness. It is very easy to use. When price upper cross the EMA, it means a bullish trend. When price under cross the EMA, it means a bearish trend. But, just like the laws of the universe, there is not thing great for all. EMA is a lagging indicator. Actually, it is super lag, which will make you miss out on some big move in the market, and also cause a very poor reward and risk ratio.
I have a question. What does poor reward and risk ratio mean?
Let's look at this example. With traditional EMA, you enter your trade late in the trend. Your room of stop loss needs to be very large, and the room of take profit will be very small. With this new EMA, you enter your trade early in the trend. Your room of stop loss can be very small, and the room of take profit can be very large. Open Indicator tab. And searching for Zero Lag EMA version 2, made by Kavantaus Bilgic. We need 3 lines, so you need to click 3 times. In the setting part, change the period of the first Zima to 20, and change the plot color to green. Change the period of the second Zima to 40, and change the plot color to red. Change the period of the third ZIMA to 60 and change the plot color to blue. If the ZIMA orders like this, green on the top, red in the middle, and blue on the bottom, it means a bullish trend. If the ZIMA orders like this, blue on the top, red in the middle, and green on the bottom, it means a bearish trend.
So, how to use this indicator to enter our trade?
The strategy is pretty simple. First, we need to wait for the bull trend to occur. Second, the price needs to pull back to touch the red line, but not to touch the blue line. Third, when the price crosses over the green line, we can enter our long trade and place our stop loss under the recent swing low and place our take profit with a 2.5 risk and reward ratio. Sell example. First, we need to wait for the bear trend to occur. Second, the price needs to pull back to touch the red line, but not to touch the blue line. Third, when the price crosses under the green line, we can enter our short trade and place our stop loss above the recent swing high and place our take profit with a 2.5 risk and reward ratio. Technical analysis. Technical analysis is the cornerstone of a successful trader. It gives you a broader vision to see the market. But the most common mistake of beginner trader is using too many indicators.
But that is because I need to know current market trend, momentum, and entry signal at the same time.
What if I told you there is one multi-purpose indicator that can do trend identification, momentum identification, and buy and sell entry signals identification at the same time? And I will not only reveal the name of the indicator, I will also give you the strategy to gain profit. Open the indicator tabs and typing BX Trender made by Quant Therapy. We can use this indicator to identify trends, momentum, and entry signal. The dark histogram and line is BX Trender histogram and BX Trender histogram line, which indicates the current trend. When it is above the zero horizontal line and with green color, it means a bullish trend. When it is above the zero horizontal line and with red color, it means a bullish trend pullback. When it is below the zero horizontal line and with red color, it means a bearish trend. When it is below the zero horizontal line and with green color, it means a bearish trend pullback. The green and red part is BX Trender oscillator histogram, which indicates the current market momentum. The light green histogram means the strong bullish momentum. The dark green histogram means the weakened bullish momentum. The light red histogram means the strong bearish momentum. The dark red histogram means the weakened bearish momentum.
Wait, I have questions. What is market momentum? What is the difference between market trends?
Market trend refers to the general direction in which a market or asset's price is moving over a certain period of time. It indicates whether the price is primarily moving up, down, or moving sideways. Market momentum is a measure of the speed or strength of price movements in a particular direction. It helps traders understand the rate at which prices are changing. High momentum suggests that a trend is gaining strength, while low momentum might indicate a potential slowdown or reversal. Let me give you an example. Look at this chart. The price keeps going down. It means the trend is bearish, but you can feel there is a force that wants to slow down the price and try to push the price toward the opposite direction. And we also can see even the trend is bearish, but the momentum has already turned from bearish to bullish. There is one component I have not introduced yet, and that is the buy and sell signal of this indicator. The green dots means a buy signal, and the red dots means a sell signal. The entry strategy is pretty simple. When the trend histogram is green, it means a bullish trend. And the oscillator histogram also is green. It means a bullish momentum. And when the green dots appear, it means we can enter a long trade. When the trend histogram is red, it means a bearish trend. And the oscillator histogram also is red. It means a bearish momentum. And when the red dots appear, it means we can enter a short trade. We want to push our accuracy to another level. So, it is time to add confirmation into our strategy.
Wait, what is confirmation?
Confirmation is using additional information or signals to validate a trading decision. It's a technique that aims to reduce false signals and increase the likelihood of successful trades. Okay, back to the chart. Open Indicator tab, and searching Donchian trend made by Lonesome the Blue. Change Donchian channel period to 200, and change the line width to 1. Also disable these two chars. The Donchian Trend Indicator is a tool used in technical analysis to identify trends in the market and potential entry points using the upper and lower bands of the Donchian channels. When the green line appears and the prices are above it, it means a long-term bullish trend. When the red line appears and the prices are below it, it means a long-term bearish trend. Let's see some examples. In this example, the BX Trender trend histogram is green, and the BX Trender oscillator histogram also is green. In the meanwhile, the green dots appear, and the green dots also appear under the zero horizontal line. And the prices are also above the Donchian trend, so we enter our long trade. In this example, the BX Trender trend histogram is red, and the BX Trender oscillator histogram also is red. In the meanwhile, the red dots appear, and the red dots also appear above the zero horizontal line, and the prices are also below the Donchian trend. So we enter our short trade. RSI, Relative Strength Index. Many people like to use RSI, including me, which is a great indicator based on volatility to identify if the current market is overbought or oversold. But RSI has some drawbacks you might not notice. For example, in this chart, the price stays in the upper trend, but RSI keeps bouncing between the overbought and middle line, which is hard to identify the trend.
So, is there an indicator that can blend volatility and trend identification to make better predictions?
Yes, that is exactly the indicator we're talking about. Let me introduce the Relative Trend Index. We can find this indicator on TradingView indicator windows and search for the Relative Trend Index, made by Zierman. This indicator can measure market trends' strength and direction, which is also designed to adapt to market volatility to minimize the effect of minor and short-term market fluctuations. We also can customize the trend length and trend sensitivity. Trend length determines how long the price data will be involved in the indicator calculation. If we want to identify the long-term trend, we can use longer trend length. If we want to identify the short-term trend, we can use shorter trend length. Trend sensitivity means the threshold of the significant trend. High sensitivity level means the fewer price movements as significant. And it also means less sensitivity to price. Low sensitivity level means the more price movement is significant. And it also means being more sensitive to price. RSI solely focuses on speed and change of the price movement, leading to potential false signals during extended trending periods. RTI incorporates the relative positioning of the current closing price within its recent range, which offers a broader perspective on market conditions. It is also more adaptable with user-adjustable sensitivity, which can fine-tune its responsiveness market fluctuation.
So, how to use RTI to make profit?
The strategy based on RTI is pretty simple. When RTI crosses over its moving average, and also in the overbought zone, it's a buy signal. When RTI crosses under its moving average, and also in the oversold zone, it's a sell signal. But if we only use these conditions to make buy and sell decisions, which will end up with low accuracy. So, let me introduce the next two indicators to do confirmation. We can search in the indicators windows for market bias, which is made by Professor X. After we add to the chart, we need to disable hike and smoothed, and then adjust the smoothing to 10. The second indicator is volume, which is made by TradingView. After we add to the chart, we need to enable the volume moving average. Market bias is used to do trend confirmation and pullback confirmation, and the volume indicator is used to do volume confirmation. Let's see this example. First, we need to make sure the RTI crosses over the moving average, and the RTI also needs to be in the overbought zone. Second, we want the market bias trend ribbon to be dark, which means the price is currently pulling back. And if we buy at this point, it means we can enter our trade at a discount price. Finally, we need to make sure the volume is green and also above the moving average, which means there is enough buy momentum to keep raising the price. Let's see the short example. First, we need to make sure the RTI crosses under the moving average, and the RTI also needs to be in the oversold zone. Second, we want the market bias trend ribbon to be dark, which means the price is currently pulling back, and if we sell at this point, it means we can enter our trade at a discount price. Finally, we need to make sure the volume is red and also above the moving average, which means there is enough sell momentum to keep lowering the price. I spent the last 6 months with only one single goal, that is coding the best indicator I could, spending my day and night, optimizing the performance to the best, backtest every time frame in markets, and I'd like to say, it is definitely worth it.
I just finally know what I have to do.
You know, I deal with a lot of indicators. I am researching and studying lots of high-performing strategies, remove all the drawbacks, combine all the edges, make it become my personal private strategy that I haven't shared on this channel ever before. And I engineered it into one single indicator, adding features to it that no other premium indicator has. Just look. Real-time buy and sell signals, giving you the best entries for longs or shorts. Optimize take profit points, so you get out of the trade at perfect spots. Automatic support and resistances, so you don't have to waste time drawing them. A trend table that will give you useful metrics and let you know how the market is trending with just a glance. Customizable settings to where you can change the sensitivity based on if you're a more aggressive or passive trader. Other popular indicators are already pre-installed into one indicator, so you don't need TradingView Premium to have 3 or more indicators on your chart.
Sounds great.
I'm going to show you how to use this indicator correctly, the best optimal settings for it, how to avoid false signals, and how to use it to the best of its ability. So for this first example, we only have custom bar coloring and baseline enabled in the settings. So our chart is pretty simple right now, but let's just start with something simple, and then we can get into all the advanced settings later. We are looking at Tesla on the 4-hour time frame. From all the back tests we did, the 4-hour time frame seemed to provide the best results. This indicator works on all time frames and all markets that have sufficient volume, including stocks, forex, crypto, futures, etc. But just know from our backtest results, the 4-hour time frame seemed to perform the best. Now first off, you have 4 different entry types: strong buy, buy, sell, strong sell. A strong buy has a greater chance of being a successful trade than a normal buy. The same thing goes with the sell signals. So look how beautiful this indicator works. So here we have a strong buy. So we entered the trade, we waited a little bit, and then we see the first take profit mark. The cool thing about this indicator is it'll give you a take profit mark based on your trading sensitivity from the sensitivity you put in the settings. This is also where you can start putting your own twist on the indicator, depending on your risk tolerance. So if you wanted to be on the safer side, you would sell 75 of your position at the first take profit mark. If you wanted to be a little on the riskier side, you would only sell 25 here and let the other portion ride. It really depends on the style of trader you are and what you're comfortable with, but just make sure you sell a certain percentage here for guaranteed profits. So we sell some of our positions here and let the other half ride. The chart continues to go up, and we end up getting another take profit mark. This is where you would close the rest of your position. And look what ends up happening after the market starts going downward. So the indicator got us out right at the perfect point, right before the trend starts to change. And we ended up making some pretty good profits, as this was a 20% profit after that trade. We look for another, we wait a little, and end up getting a sell signal. Now, like I said earlier, strong sell perform better than regular sell. But the regular sell can still give some really good entries. So we enter the trade, the market goes down, we get our first take profit, we sell a percentage of our trade here, and let the rest ride. And then we get our final take profit mark. That's 2 successful trades so far. Let's see what happens next. The market starts to consolidate, and we end up getting our another strong buy signal. So we enter our long trade. We then see what the market does next. It looks like the indicator was right, because the market starts heading upwards. We get our first take profit mark. So we sell a percentage of our position here, and let the rest ride. The market continues to head upwards, and we get our final take profit mark, and sell the rest of our position. So this indicator does work with both long and short trades, and you can disable or enable them in the settings, in case you prefer one over the other. As you can see, this indicator is working beautifully so far, and we are 3 for 3 now. Next, we get a sell signal. Market consolidate and retrace back. But don't worry, I will teach you how to spot this false signal later. I'm gonna speed through these last couple trades, as I think you guys are starting to understand how it works. We get a strong sell signal, take profit mark, sell a percentage, market goes down, get our final take profit mark. Strong buy signal, take profit and take profit. Sell signal, take profit and exit the position. Strong buy signal, take profit and take profit. Sell signal, take profit and take profit. Buy signal, take profit. Now look the data at the last bar. It's the real-time market right now. And if we calculate our trade, it's 9 for 10. Super crazy.
This is amazing.
Remember, we have a false entry signal in the early trade. I'm about to show you ways you can know it's a false signal before it even happens. Let me introduce the trend table. The trend table provides useful metrics, so you can easily see how the market is performing with just a glance. It'll tell you the trend strength, momentum, volatility, volume, EMA closed, which are all very key areas you should be looking at before entering a trade. You can turn this option on in the settings of the indicator called Show Key Metrics. So going back to the false entry signal example, here the indicator gives us a sell signal. But if we look at the trend table, nearly all the metrics are bullish, which could be a good indication this is not a good sell signal. So we would disregard this signal. And look what happens. We were actually in a consolidating market, and the price starts moving sideways, giving us what would have been a losing trade. There, in order to get a high probability setup for a short, you want most of these metrics to be bearish. And obviously for long trades, you want most of the metrics to be bullish. If a lot of the metrics are the opposite of the entry signal, it's a pretty good indication the market is consolidating. You can even confirm trades with their custom baseline feature. If you don't see it on your chart, go to the settings and check this baseline feature. You would only enter a trade if you get a sell signal, and the baseline is red. If you get a sell signal and the baseline is green, you would not enter that trade. The next tip I have to optimize this indicator's performance is using the automatic support and resistances. Now I do have to say these things are really cool. What the indicator will do is show you the most important support and resistance point. So you don't get something like this, where you have 10,000 different lines of support and resistances on your chart, making it super cluttered. The red line is the resistance. The green line is the support. The indicator will automatically adjust the support and resistances in real time, which is pretty damn cool. So how I like to use them is by using them as potential take profit points. As an example, we know this red line is a point in the chart where price is likely to hesitate. So we should sell a percentage of our position at this resistance, if price ever hits it that way. So here's an example. We get a buy entry signal. We enter, and as you can see, price starts heading towards our resistance. Then it hits. Even though we did not get a take profit signal, we are still going to close a percentage of our position. Price actually does exactly as we expected and bounces off the resistance. And then later, the indicator tells us to exit the trade. Where this originally would have been a losing trade, we actually made money from this and made it a winning trade. It's definitely important to use these automatic support and resistances to really make sure you're getting the most out of the indicator. You can also do the same type of thing with pivot points, which we actually pre-built in the indicator. They can also be great support and resistances and potential take profit points. Here's an example. We get a buy signal, price heads upwards, and starts slowing down at the pivot point. Even though we didn't get a take profit point, it might be a good idea to close your position. Here, as we know, the pivot point will have a lot of resistance, which if you did, you turn what would have been a losing trade into a winning one. You can also use them as supports and put your stop losses below them, So if you entered a trade and price ends up breaking the pivot point, it might be a good idea to exit the trade, even though you didn't get an exit signal. If you implement volume, trading patterns, divergences, price action, risk management, etc., this indicator performs extremely well. Hopefully you got the point. You shouldn't just simply blindly follow the buy and sell entries. You should be incorporating other trading techniques on top of the indicator. If you would like to check out the indicator, I'll leave a link in the description.